No. All right, then cool. So I will go on to the Canada fundamentals and sorry, 1 second. Right. So what I want to talk about is several things on this. Is the Canadian dollar recently has been, I guess, a buy, right? And for those of you who are new to fundamental analysis, and I understand, I definitely get it. It can be overwhelming. There's a lot to read. There's a lot to learn. But as I would, we'll always say that there's always a learning curve to everything. If you think trading is just going to be about, all right, follow this, follow that, A, B, C, D, and then just take the trade, you've got another thing coming. If trading was that simple, we'd all be rich, isn't it? Everyone can trade support and resistance. It's not flipping brain surgery to trade support and resistance, but there's obviously more to it than that. But the point I'm trying to make is that fundamental analysis is something that you have to keep on top of. You really do. And also, as well, fundamental analysis is not instant gratification, in a sense that you have to understand how the market works. Yeah, you really, really, really do. And always keep this in mind. Yeah, because the banks, and for those of you who have done the stop hunt course will understand this. For those of you who haven't got there, I'll just do a brief overview. Banks cannot trade how we trade, how the retail trader trades. They have to take time in order to scale in. They can't just place an order, a random order of, say, for example, 1 billion, pounds in the market. Yeah. Because they would suffer from something called slippage. Yeah. So they're trying to avoid slippage. And the reason why that is because if they place too big of an order, it tips everyone else off. Yeah. So if you can see that, for example, Goldman Sachs placing the £1 billion order all of a sudden out of the blue to buy euro dollars. Yeah. Remember, there's algorithms in the market that are working on like nanoseconds, right? It's literally like they're faster than you can blink kind of thing. Yeah. They're making all these calculations in trades, buying and selling, right? So if the financial institutions, one massive financial institution tries to place, for example, a billion, 5 billion, 10 billion, who knows, 100 billion pound order, yeah, in the market, they're going to suffer from something called slippage. And slippage is basically just being, you're getting in at a worse price. So in order for them to fill this buy order, yeah, they need at least 1 billion, yeah, 1 billion pounds worth of sell orders, yeah, at that specific price, which they can only get filled on. Forget all the other market participants. They're not going to buy at this, maybe 120 level on the euro. Yeah. It's only going to be filled. You're going to have $1 billion worth of sell orders. And then Goldman Sachs are going to come in and they're going to basically buy all that up at that particular, point in time and price. Yeah. The likelihood of that happening is pretty much slim to none, because by the time certain orders get filled and they get alerted, all of a sudden, you know what, prices are going higher. Yeah, because demand is coming into the market. All of a sudden, it's 1.205, right? 10, 20. And they've only managed to maybe fill, 2 million, for example. Yeah. And then they have to fill another 5 million here. And then they got to fit another 10 million here. And by the time they keep increasing their position sizes, by the time it gets to 121, they still may not have filled their whole 1 billion, right? So this is what's known as slippage. It's basically getting at a disadvantageous price. They can slip to the upside or to the downside. Yeah. So banks can't trade how we trade. We're trading in tiny, tiny small lot sizes compared to the banks. We can just place our lot sizes and it wouldn't, it's like pissing in the ocean kind of thing. Excuse my language. But the point I'm trying to make is that you have to be aware that banks have to scale in. This is what's known as iceberg orders. Yeah, they have to scale in. Basically, they have to break up their 1 billion, pound order into really small chunks to hide and disguise and not to tip off the market as to what they're doing. And it's not just one. There are many different, there are hundreds and thousands of hedge funds and financial institutions and sovereign wealth funds. And you know what I mean? They're all doing the same thing all at the same time. Yeah. So there's a game that is being played here. Yeah. So the game being played is to try and fill your orders without causing slippage and to get the best prices possible. So they can't trade how we trade. You must keep this in mind. You must keep this in mind. So when you see, for example, price, if you see fundamental analysis and something, price, some sort of news event comes out, right? And prices don't start shooting to the moon, 1,000 pips, and you're like, well, they've just hiked rates or they just cut rates. Why isn't price doing what it's supposed to be doing? Generally, and I say typically and generally in these terms, because nothing is absolute in the markets. The market is trying, and I say the market, but the financial institutions are trying to buy at the best price and avoid slippage and trying to get their orders off. That's what they're trying to do. So it doesn't benefit them for prices to go all the way to the heavens in the way that we want as retail traders. They can take, days, possibly even weeks and months to fill these orders. Yeah. They can take days, weeks, and months to fill these orders. So how does that relate to, for example, the Canadian dollar? Yeah. And if you have been paying attention to the Canadian dollar, and I've been saying this pretty much the whole year, but just recently, we'll go over, the month, right? So we'll go back at the beginning of the month, probably around maybe the end of the month, end of March, April, right? We were saying buy Canadian dollars, buy Canadian dollars, buy Canadian dollars. Yeah. And one of the use of these channels is to really get an overall theme, yeah, as to what the financial institutions are doing. There's no point in reading, small blogs from opinions from people who, don't really matter. You want to read and get quotes from the financial institutions. Now, will they all agree? No, of course not. But you go with the consensus and whatever the consensus is saying, right? Sorry. So we wanted to be long New Zealand. Yeah. Long Canadian dollar, right? So what was one of the rumors? What was one of the rumors that we were looking at when it came to the Canadian dollar? Why would we want to get long the Canadian dollar? Right? Can anyone, and maybe a few people, maybe just chime in and just why would, from a bigger picture perspective, from an environment, from a risk perspective, why would we want to get long the Canadian dollar? Right. So they will reduce. Okay, so that's one. And you say they will reduce, that kind of came a bit later, but that is a contributing factor, right? So that's one. I want someone else to give me something else as to why from the beginning of the year, even if I was buying Canadian dollar from last year, matter of fact, from like last year, like November, right? October, November. But why were we buying? Why was I so specific on buying the Canadian dollar? Risk environment. So Edwin says probably interest rate hike is higher, and yeah. So that was another thing, but that came after the reduction in bond buying. So that's more recently. Sam says commodity currency strong in risk on environment linked to fact. That's another one that's fantastic. Global recovery supporting risk assets. Absolutely, that's exactly it. Remember, try and maybe think about the bigger picture first. The bigger picture, which is the risk sentiment, the environment that we're in. Yeah, that's the reason why we start off with the RoRo guide on the little tab at the bottom left-hand side. We start off on this. So we look at the bigger picture first on the fundamental analysis spreadsheet, and then we can decide where our currencies to trade, right? So ever since the vaccine has been rolled out, which was last year, October, I think it was the end of October, beginning of November, I've been saying to traders, buy Australian dollars, buy New Zealand dollars, buy Canadian dollars. Anyone who's been with me for that amount of time will know I have not changed my bias. Anyone here, Sam, I think Paul's been with me for a while. Have I changed my bias? Have I said anything about not buying those currencies? No, exactly. I've always, Lawrence as well, I've always said buy, buy, buy. Every week and go back through my weekly fundamental videos. Buy, 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 buy. Sell the Swiss franc and the Japanese yen. Yeah. So bigger picture first, because we understand global growth. So the global growth situation is if, yeah, there was a moment, yeah, you're right. There was a moment where the New Zealand dollar did come out a bit weak, but then that maybe lasted maybe a couple of weeks and then we was back on the New Zealand dollar again, right? We just said, oh, you know what? Exactly. We were buying it again. So the point I'm trying to make is this, is we understand the bigger picture. And then we were getting data to support that narrative, because we don't just want to start buying something without the data supporting it. You need the data to confirm this. Yeah. So the CAD, the beginning of the month, and even before that, but we'll just do, you know, the last month or so as we're coming up to the end of the month, right? So you've got pound sterling. The Canadian dollar is forecast to continue its solid performance. This was March the 31st, according to MUFG. Yeah, the CAD remains well supported. And then there's, you know, details in here. So the Canadian dollar is referred to as a commodity currency owing to the country's hefty oil export sector, which is a major source of foreign currency earnings and therefore fundamental support of the Canadian currency. This is not Leon Rose saying this, yeah? This is not Leon Rose picking this out of the sky and Leon Rose theory. These are banks and people who manage billions and portfolio fund managers that manage billions that are giving you quotes, yeah, that giving you their opinions. So it's not me saying this, I'm just reporting on what they're saying and where their money's flowing into, right? And we can go into the details, of course. And then here it said last week, the Bank of Canada indicated it was laying out framework for removing some of the stimulus it had created during the COVID crisis and would start shrinking its balance sheet once more. So remember, this is like the 31st of March. The 31st of March. So let's see on the 31st of March what the Canadian dollar was doing, right? So Canadian dollar 31st of March was pretty much at highs. If you zoom out, it was literally up here, right? So the rumor started to circulate, or it's probably circulating maybe a bit before that, but the rumor was that they potentially could taper. Right. So everyone, not if by the time we're reading it, yeah, and seeing certain things, probably, you know, certain plans are already in place, right? They're the ones that are they're the ones that have seen this first, and they're just, you know, reporting and we're reading, right? But where do you think the banks want to buy the Canadian dollar, understanding that they're going to potentially be reducing tapering? And what reducing tapering is simply, right? Reducing bond purchases is that they're reducing printing of money, yeah, quantitative easing, whatever you want to call it, and buying government debts, because buying the government bonds is the bank are buying the government's debt, yeah. But in order to do that, they got to print money out of thin air, yeah, and they got to put it on their balance sheet. So by reducing their purchases, it actually has the effect of, and I don't want to use the word strengthening, but it makes the currency less weak. Yeah. So when you have extreme QE and then an increase of QE, yeah, I should say increase down. So you have an increase of QE. Yeah. That is generally should weaken the currency, and the currency should depreciate. If you have a decrease in that, that should have the opposite effect. Yeah. So that is generally positive. A reduction in bond purchases and bond buying and quantitative easing, etc., right? It should have the effect of strengthening the currency. So why did the Canadian dollar? Why was the Canadian dollar getting weaker? And the rumor was here. Rumor started probably somewhere around here. Like I said, we read it here, but it's probably somewhere around here, wherever. But why, if that was the rumor that started around the 31st, why did the Canadian dollar sell off? Anyone tell me? Or why do they think? Why do you think? You can speak up if you want to speak. Simple. Buy the rumor, sell the fact. Yep, definitely Puntukas, but be a bit more specific, knowing what we know. Yeah, because they bought the rumor. If they were buying the rumor, why didn't price go higher? Expensive area for the CAD. There you go. There you go. Expensive area. Profit taking, getting liquidity for the right. There we are. Right. This was expensive. Right. Looking for better prices. Thank you. Thank you. Thank you. Thank you, guys. This is brilliant. So you understand now how this works. Yeah. Technical traders, yeah, who don't understand fundamental analysis will say, well, this is, well, you're talking about them reducing bond purchases, but yet prices went down. It's a very narrow-sighted and short-sighted way. And I guess it's not their fault, right? They don't understand how this works. So it's not to their detriment, but you have to know, yeah, where value is, right? And this is what the banks are doing. They know, and this again comes back to understanding how they trade. Yeah, this is understanding how they trade. Yeah, they don't want to buy at expensive prices. So what? Because they're trying to avoid slippage. Yeah, so they know that the rumor potentially is coming. So they don't want to buy all the way up here. They don't want to buy. It's too expensive for them. So then what they do is they draw traders in, yeah, to the downside. So they can start to profit take and sell, yeah. And if all the money that they've made from here and the money that we've been buying, the Canadian dollar, they can start to sell. Yeah. Now, when you've zoomed in, and I guess let me just clear this chart. When you've zoomed in, it will look like the heavens are falling. I've seen, some people say, why is the Canadian dollar crashing? Why is it crashing? Oh my days, what's happening to the Canadian dollar? That's a very, very short-sighted way of looking at price. And this is the reason why price is deceptive. Yeah, price is very deceptive because if you understand and if you zoomed out in the bigger picture, you would understand that the financial institutions and what they're doing, yeah, is looking to buy at a cheaper area. They don't want to be buyers up here. So as prices are coming down, there is multiple things happening. They can start to add in because from a liquidity perspective, yeah, as prices start to go down, they can also reload because there's more buying. Because the more that you get these moves, these parabolic moves down, what do you think retail traders are doing? And what do you think, for example, just technical analysis traders are doing? Which way are they going? Selling, right? Exactly. Sell orders. Sell orders allows the facilitation of buying. And as prices keep coming down, yeah, who's doing the buying? Who is doing the buying? Who can hold? Who has the money to hold? Right, exactly. The banks. That's exactly what they're doing. They can hold these trades. Remember, they're not trading with. They're trading on a sophisticated level, on a high level where they can hedge in and hedge out and things like that. They're not saying, okay, well, I'm going to put my stop loss right here and tighten 10 pips, 20 pip stops and things like that. No. Remember, these things can last for weeks and even months if they want to get long and short. And nobody knows. No one knows when or even if this is A, going to turn around, yeah, or B, when their boots are filled, right? Because we don't know. Remember, there's hundreds of thousands of them, yeah? This could just be the leg up, and then we could start to go to the downside. Again, traders would say, well, Leon just had a webinar and he said that, we were supposed to go, the Canadian dollar was supposed to go higher. But we don't know whether, Goldman Sachs, as well as MUFG, as well as Nomura, as well as NatWest, as well as ING, as well, you know what I mean, have all filled their books, because prices could do this, which is the accumulation phase potentially, right? And this could take weeks for it to fill, and then prices go to the upside. Nobody knows in the short term. Nobody knows in the short term. Yeah. But let's just go through the rumor, right? Because the money is made. The money was supposed to be made buying the rumor, right? Or in this case, we had to understand that where price was when the rumor started, so that we're not just buying because we think that the rumor is true. We have to understand one thing is value. Where is price currently? Yeah, that's the question. When the rumor starts, one of the things you have to understand is, where is price currently? If it's at an expensive level, if it's at recent highs, and you start to see positive news come out, yeah, or there's going to be a shift, and you start to see prices go against you, it has to be for the reason that the banks don't want to buy here. Of course, they could, right? Prices could go up and could go higher. Nobody knows. But if you start to see this, but you also start to see good news and continued good news around the Canadian dollar or whatever the currency was, then you have to assume that they are accumulating. So let's go through it. So April 1st, I've highlighted some of the stuff, right? So April 1st, Bank of Canada's tentative trajectory places it on course to become the first major central bank to curtail a pandemic-inspired quantitative easing program, which is supportive for the Canadian dollar, as it could eventually give way to more palpable speculation on the timing of an initial Canadian interest rate rise. Yeah. So positive interest rate rise, interest rate hikes, rumor. Yeah. We've got some stuff that wasn't great for us at the time. Yeah. Which was basically Toronto went into a bit of a lockdown, or potential businesses at breaking point. That wasn't great for us, right? The sentiment there, nothing's ever going to be smooth sailing. But thank you for Sam for putting this, for posting this, sorry. And this was from Wells Fargo, and they said in this, if I'm correct, they were talking about the I'll read it out quickly. So it says, we continue to believe the outlook for Canada's economy is reasonably robust as active indicators begin to improve. February's employment data signaled the labor market is recovering ahead of the schedule, while strong retail sales encouraging for the health of the economy. In addition, elevated and stable commodity prices should support the economy as well as the currency, at least for the time being. The combination led with a strong monthly GDP report. So they mentioned GDP month-on-month basis. Canada economy expanded 0.7, beating the consensus forecast. So that was again better than expected. Year-on-year time frame, the economy recorded a contraction of 2.3%, also better than the consensus forecast had estimated. As a result of improving economy, the Bank of Canada has started to prepare financial markets for the possibility of less monetary policy accommodation in the near future, right? So again, we're just seeing it from all over the place, not just, one or two banks. We're seeing it from multiple experts. Recent actions combined with policymaker comments led us to believe the Bank of Canada would announce further tapering in its asset purchases as soon as the April meeting, which they actually eventually did. But at the time, this was the expectation. In addition, we believe the Bank of Canada is on pace for a rate hike, again, rate hikes earlier than the central bank is currently signaling, when we see a 25 basis point in the second half of 2022, while our view on the 2022 rate hike is out of consensus at this point. We're comfortable baking tighter monetary policy into the forecasts. Yeah. And I think what I originally wanted to say was, I thought that they were going to talk about the recent virus spikes, but there was an article that spoke about the virus spikes in Canada, but they said that it shouldn't be a concern. But anyways, that was again positive for the for the Canadian dollar. Yeah. So again, we've got Canada, virus tally passes 1 million in third wave. So it started to look a bit bleak, right? But economically, things were still, really good. Canadian dollar shows its swagger as super cycles. And I don't know if you guys know what super cycles are, but it's basically a commodity boom, basically. And commodities super cycles can last for decades. But this is positive for the Canadian dollar. So Canadian dollar looks to extend outperformance deeper into 2021, right? So again, positive news for the Canadian dollar. Canada recovery kicks into high gear. So recovery, yeah, economy adds 303,000 positions. Unemployment falls 7.5. So even though we had some scary news around the coronavirus potentially spreading, the economic data was showing something different. Yeah, and again, I think this was Ken does point that out. Next report may be weaker due to recent lockdowns. True, but we have to go with the data, right? And so again, Barclays tells clients to return Canada's most economically important province lockdown. Right. So this was it. This is what I was thinking of. Right. So most economically important province to lockdown will raise fears of a setback to the economic recovery. But the Canadian economy has proven more resilient to COVID lockdown measures than many had anticipated. And Barclays say the narrative of a more robust vaccine rollout in the second half of 2021 and higher oil prices still implies a supportive backdrop for the currency. And we don't foresee any significant impact on the CAD from the new virus restrictions beyond the near term. Yeah, near term meaning short term. Yeah, and continue to forecast dollar CAD at 122 by the year end. The narrative of a robust economic recovery remains firmly in place. Again, this was what? April the 13th. Yeah. So markets see a high likelihood of the Bank of Canada announcing tapering of assets on April 21st, with COVID vaccinations lagging the US, lockdowns still in place in Ontario, Quebec. We are less certain that these expectations will realize near term. Yeah. So basically saying that it's not really going to, the virus hopefully shouldn't really affect the Canadian dollar. And there's a little speech here that says, a quote that says, the fundamental picture in Canada remains unequivocally strong as the prospects of US demand momentum adds to the already beneficial impact from oil prices, right? So he's saying, all right, short-term wise, you might see a bit of weakness, but in general, Canadian dollar is a buy, because you have to always think as well as who's the dog with the least fleas? Yeah, who is the dog with the least fleas? Who's the best of the worst, or who's the worst of the worst? And Canada, in no way, shape, or form, was the worst of the worst. Yeah. So we're seeing positive Canadian dollar news. Yeah. A bit more COVID news, I think, that was going on here. What was this one? Ontario checkpoints. Yeah. So it was a bit scary. Prices were coming down, etc. But again, we were thinking more short term. And then by the 20th, we had Bank of Canada preview, and then we had nonetheless an announcement to reduce QE purchases at the April meeting would be consistent with prior communications, given if a rate hike is still more likely to be early 2023 in our view. And then we have, Credit Suisse basically talking about Canada dollar dips are a buy. Yeah. Canada dollar dips are a buy. And then we've got Bloomberg, Bank of Canada set to dial back. So this was on the day. So basically the rumor came true, right? So there was a bit uncertain. The rumor came true, right? So they dialed back bond buying, and that was their decision day. And on the decision day, so they've been selling. And then also I shouldn't say selling, I should say more probably accumulating and buying with the expectation of that to happen. And then what happened on that day is this. Basically this candlestick right here, right? So what that does is that starts to now look for the liquidity, because everyone who's getting short, where's the liquidity? If I want to buy, all the liquidity is above these areas here. yeah, above these swings. Well, we're talking about liquidity. So anyone who's gone short here, yeah, short into these areas, that's where the buying liquidity is. Yeah. So if I want to buy, if I need to sell, yeah, I'm going to look for any kind of liquidity. And that's where it was. It's all above the market. This is what is known as, stop hunting on a major level. But also as well, this is where the banks wanted to buy. They didn't want to buy at 75. They didn't want to buy all the way up here. They wanted to buy down here with the expectation of prices to definitely reach up here again, or potentially even higher. But again, do not forget that this isn't set in stone. Nobody knows in the short term exactly how prices will get to where it may get to. It could do something like this and go straight up there. Brilliant, excellent. Or it may not, right? It could continue going down, up, down, or it may never get there, right? It may never get there because who can predict the future? There could be some bad news out around Canada, some fantastic news out around the Swiss franc, and it may never get there. This is a probabilities game, but the probabilities now are on our side. Because remember as well, I'm going back to the last thing I'll say, going back to this. These guys, when they make bets, it's almost like they can't just enter and exit trades like how we can. If I've decided to say, all right, then, well, you know what? I don't really fancy that trade anymore. I can just take it off, right? I press cancel, boom, and that's it. These guys cannot do that. They have to unwind their positions if they're wrong. And it can take, again, the same thing, the same way that they have to scale in to get into positions, they have to scale out slowly to get out of positions. So the point being is that if they try not to be wrong, right? They try not to be wrong. So if they are wrong about it, then fine, they're wrong about it. Not everyone's going to make money. Yeah, they can still make money when they're wrong. Yeah, but the point is that when you're looking at the price chart, and as long as there is supporting evidence, yeah, that continues with the Canadian dollar looking like they're going to be hiking rates, GDP, interest rates, inflation, and everything is pointing in the right direction, know that the banks are also in that trade regardless of what price is doing in the short term. So if you see something like this happen, stop. Don't cry about it. Don't go, oh, what's happening? Look at that as they're looking to buy. Do you know what I mean? Now, because this now looks like an absolute bargain, doesn't it? This price looks like an absolute bargain. Who wouldn't want to buy the Canadian dollar down here now, knowing what you know about potential future events? So if prices do come back down here, chances are it's a buying opportunity. And that actually is quite a nice CPR zone as well.